The Johannesburg Stock Exchange celebrates its 125th birthday year. It's the largest stock exchange in Africa with a price-earnings ratio of 20 and a market cap of 7 billion rand. The JSE posted headline earnings per share of 562 cents for 2011, primarily as a result of impairments made in respect of software under development. And Jonathan, let's throw this to you right away. Nikki Newton-King is now in the hot seat. Change of management. She's the fourth CEO to take over the reins of the JSE. Do you think this heralds a new time for the local stock exchange?
Well, I mean, owning the JSE, buying shares in the JSE, I think it's the thing you want to do when you buy a share is you want to buy a share with a very strong moat around it. You want some share, like an asset manager can be here today, gone tomorrow, nobody blinks an eye. But the JSE can't disappear tomorrow. If the JSE disappears tomorrow, how do we trade our shares? So this business has got a very strong moat around it. It's got a monopoly, whether we like it or not. There's no competitor. If I wanted to start a new JSE tomorrow, I would struggle. I would struggle for 20.
The barriers to entry are just far too high. You're not going to be able to achieve that.
Well, exactly. And so as a result of that, you're prepared to pay more for the business. Because if the JSE does fall on hard times, they raise their fees. What do we say? No, we can all protest, but we all need data feeds from the JSE. We all need pricing. We all need the JSE to put our trades together. So they can make money.
And let's pick up on that, Eugene, down in Cape Town. There's a sustainability story, let's use that terminology when it comes to the JSE. We don't have any choice, it's a monopoly. Is it a sure bet from an investment perspective?
It might have, it's true that the barriers of entry is very high, but I think maybe that's a 2 or maybe a 5-year story, but they're going to get competition over the medium to long term. However, I think what's important here is to look at profitability. This is a company that is in a captured market that can push prices the way they want in general, not always. And they've got, they're not generating the type of earnings that I would expect in this kind of environment. And I think one of the issues there is that they sit with severe system problems over the past 3 to 5 years. They just can't sort out these systems.
But they have clearly
spent excessively there.
They have clearly said that it is a focal point now, and Nikki Newton-King moving in to be very heavy-handed in that arena and sort out the systems and processes. Do you think she's going to be able to pull it together in a quicker time frame than perhaps her predecessor? Eugene, this is still with you.
Nikki's been there for a very long time. Okay, so these problems were supposed to be addressed for a very long time. They are spending the capital, but it just gets extended and extended and extended, and more cash is sucked into the story. So from an investment perspective, I think the share is expensive. I don't think it generates the kind of cash that I would have expected from this kind of business. I think there's much better sort of low risk, high barrier of entry businesses than the JSE. I would avoid it at these kind of levels.
Well, that's not a glowing report from Eugene. Do you have a different synopsis?
The way I think of the JSE is I think of it as a utility. It's an Eskom. It sells us electricity. We have to have it. We have to buy it. I understand, I realize, we see the JSE go down more often than we would like. And they are going to have to spend on their systems. So from a near-term profitability, it probably isn't a great story.
Hot or not?
At these levels, not.
Eugene, hot or not on the JSE Limited?
No, it's too expensive.